guys, and all of those who are watching this one today. This is the volume 3 in my weekly market breakdown, and I just wanted to start off today's video by recapping the pound US dollar. This was a pair and bias I actually shared on volume 2, so if you're interested in seeing the progression of my analysis throughout the past month, go back and watch that video. What I kind of highlighted last video was this consolidation range here between 1.29800s and 1.29300s. Now, I did highlight an initial bullish bias, and I was looking ideally for a long straight off support into the resistance. However, I did also note that a solid break below support would lead me to hang fire on any longs until 1.2800 was hit as support, where I could then look to obtain a high risk to reward trade. So what actually happened during that week was we did get that 4-hour closure straight below support here. We retested it, and after seeing this formation, it was a case of hanging back, sitting on my hands and just waiting for price to reach 1.2800, which it did a few days from posting that video. Now, we could have actually successfully traded this pair short after that break and retest of support. However, I'm not somebody who likes to trade in favour of the trend, so it was just a case of sitting on my hands and waiting for my initial long bias to offer up an opportunity to buy into this pair. In terms of shorting, what could have happened was this initial break of support here. We retested. This was too obvious, this short play here, so we would have been looking for stop loss targets, which actually happened. So we had this huge spike here. Market manipulators would have looked to take in short seller stop losses, which would have been roughly around this area at 294, sorry. And when these were hit and we saw this bearish engulfing candle, we could have gone ahead and looked for some sort of position like so, which would have offered a risk to reward of 3.8%, and it actually would have hit stop loss if you took this position, unless you look to kind of secure the trade by placing stop losses at break even, or just taking profits around this support zone. But as I say, it wasn't a trade or bias I was looking to take. In fact, when price did tumble, I'll just go back onto the 4-hour time frame. It hit 1.28 perfectly. I'll just zoom in here. Remember, this is a weekly support zone which I've had on for the past month, and you can go back to all my previous videos and on my Instagram and see my posts highlighting this key support level and saying that when this is hit, I will be looking for sniper entry longs. So we had this initial spike down here onto 1.298, straight all the way down to the bottom of support, and it pulled back. We closed above 1.2800s. We then again fell even lower and came back into this region. And I'll actually just go on to the hourly time frame because we can see this move much more clearly. So what we did, we had an extension into lows here, pull back off this support, breaking out of 1.2800s. We kind of slid down and created a formation of a new higher low. And when we actually made new highs here, it was a case of, okay, the bearish trend structure has been invalidated. It has now formed a higher low and a higher high off of weekly support at 1.2800s. It was the case of saying, okay, the overall trend on this pair has turned. The fundamentals were there to support my long bias. It was a case of obtaining a long entry on this candle here, which I actually did take. And then look at placing stop losses. It depends how risk averse or how risky you want it to be, because you could have placed a tight stop loss, which I actually did at these lows here, which are around a 21 pip stop loss. Or if you wanted to be a bit more safer, you should have placed them just below support zone here. Now, if I just quickly go onto my trading view, because I actually took a long trade on this pair, and I did post my analysis up. I was on the train up to York on Thursday. I took a long trade, but unfortunately it did hit my stop loss. This was the long trade I did take. Again, it's that exact same formation that I ran over just then. We had the higher low form, and then up to higher highs with strong bullish engulfing candles off the 1.28 level. So I decided to activate along here on a risk to reward of 1 to 3.25 for a 65 pip target. I think that's very good. But if I just go ahead and press play here, it did in fact hit my stop loss beforehand before rocketing up. Now, heading back into the technicals, we could have obtained a second long, which I did in fact do, because this spike down here was again market manipulators taking out retail traders' stop losses before they can obtain their buy orders and obtain large amounts of profits on this pair without the retail trader being oblivious to what's going on. So we had the spike down, we took out retail traders' stops, including myself, we spiked back up, with a strong bullish engulfing candle making new highs. I then activated a long off this candle here. Stop losses, you could have been very risky and more target driven and placed your stop losses here, which I did at about 27.5 pips, or actually just below. And my idea behind this was, okay, the market manipulation has occurred, we've shifted in the trends, my analysis on the higher to lower time frames is still holding strong, the fundamentals are there, it's time to activate a long. And as I pointed out from last week's Instagram, I was highlighting a clear target of 1.28800s, around there, which is about a 70 pip target of around a risk to reward of 1 to 2.5. And I actually posted this setup on my Instagram, which I'll go ahead and show you guys now. So here we go. So 2 days ago, pound US dollar long bias targeting 1.28800s. I just gave a little breakdown on this pair here, saying that pretty much the bearish trend structure had been broken. 1.2800 is holding as support, and also market manipulators have taken out retail traders' stops right here, me included, and now 1.28800 is inbound. So 2 days ago I posted that up, and pretty much within, well, 1, 2, 3, 4, 5, 6, 7, 8, 9 hours of posting that, my target was hit, and the losses obtained on the previous trade were made back, including some extra profit. So I was very much happy with this piece of analysis. As I say, you know, it's all there on my social media, this analysis, which I posted up completely for free. I mentioned this exact setup in last week's volume 2 video, so you can go back and watch that and just see the progression really of this pair. It is one of my favorite trades to trade, because there is a lot of manipulation going on, especially during these times of heavy Brexit fundamental news and everything that's going on in the US. It opens my eyes to pretty much reading between the lines, and as I say a lot last video, taking the pair with a pinch of salt, taking the headlines with a pinch of salt, and just spotting the manipulation in the markets and benefiting from big companies and big corporations taking retail traders out of the market, and feeding off of their mistakes. So, after talking about how I traded this pair last week, it's all about how are we looking at this pair in the upcoming week. So we're going to go ahead on the daily time frame, because pretty much the higher time frame analysis is still there, the same as last week. We're still within the weekly trading range, which I'll just show you here. Again, this was all covered in last week's video. I won't go into it too much detail, but we're still within this weekly trading range between 1.3200 as resistance and 1.28 as support, which we can see this huge spike down and has been respected. My long bias is still there. I'm still looking at this pair pretty much making further extensions higher, but those of you that didn't catch last week's longs, don't worry, I don't think you have missed out on the run yet. What I think will happen is we had this strong bullish engulfing here off support. Be aware, don't enter instantly off this candle because this could also be a bull trap. A lot of people would have seen the move across the lower time frames and would see this formation on the daily time frame and now instantly activate a long trade. And the big market players are probably aware of this and will likely bring price a little bit further down, just to take out some more retail traders stops who are trying to just get a small pip stop loss and maximize their rewards. So heading down onto the 4-hour time frame, which is a time frame I actually love analyzing this pair, breaking down this pair on. We've got very much what I like to call rectangle structure. So we had this consolidation range here, which I talked about in last week's video. We came down. We've now found this new support at around 1.28400s after the rocket in price up from 2800. Sorry, we broke past this this lower high, which confirms the shift in the bearish trend structure. We have just touched the 50 EMA here on the 4-hour time frame, and I do think that price is in need of a little breather before heading higher. So what I would like to see is price to take a little breather, come down, find support back down on this zone here, which if we go into the hourly time frame, we've acted as support on 1, 2, 3, 4, 5, 6, 7 occasions. We then turned to resistance on 1, 2, 3 occasions, broke above it. So I think it's only fair that we come back and retouch it before heading higher. The thing I also like about this support zone is that it does coincide with a 61.8% Fibonacci retracement on the hourly time frame. All the confluences are adding up for that sniper entry long off this zone. We might even see the 50 EMA act as support as well. If price tumbles down, the 50 EMA will kind of flatline, and then when price, if it does hit this zone, we've got about 3-4 confluences there to for support. We might see price consolidate for some time, and then it will be the case of dropping down onto the 15-minute time frame and obtaining that long entry for a long straight back up to 29300s pretty much, which was the support of last week's consolidation range. However, I may be completely wrong. Price may actually open with a gap up, and we may just take out 1.29300 straight away within the first couple of days of the market's trading. So it's the case of that's highlighting my official targets now, 1.29300s for next week. I've already taken my profits off the long trade. I'm not looking to enter when the market opens unless I do see that pullback. Other than that, it's just a case of sitting on your hands and waiting for that pullback, for that sniper long entry. If you missed last week's trade, do not rush into this market just to gain profits that you missed out on. Make sure your mindset is very balanced and very calm, and just pretty much patiently wait until this pulls back if it does. The worst thing you can do is going back and looking at what you've missed and going, shit, I've missed money on the table, I need to get into this market now before it rockets up, because you have a fear of missing out. And some people, as I say, would probably long straight off this zone here on the daily time frame. And if the target was 29300, which I've stated, there's no room at all for a good adequate risk to reward with a safe stop loss. So that's my pound US dollar outlook for the week ahead. If you want to go ahead and screenshot that, please do. And then if it does work out, it'll be almost like our Mystic Mac. So be sure to DM me on Instagram and say, that's my pound US dollar breakthrough for the week ahead. As I say, last week's trade was probably the best entry that you could have got for this long move. Don't be disheartened. If it does pull back, there's always that room to enter again, as you can see on the chart now. If you want to screenshot it and call me out next week, if it does play exactly as I planned, then I'm Mystic Mac. If it does collapse and make new lows, then I'm sure I'll be open to a lot of hate comments. Never mind, we've benefited off it. We've already made our profits. That it's now time to go and find an alternative pair to trade. One thing I do want to go over and highlight before I get into the two pairs I'm going to break down this video, which is AUD Japan and AUD USD. I just want to go over my Euro to AUD short trade, which again I also activated last week. I posted it up on my Instagram story for everybody to see, highlighting my cleared downside targets. And it's this short trade here. Pretty much across the higher time frames we've entered this zone between 1.6 and 1.62 hundreds, which has been, I'm not going to go into too much detail, but it's been heavily used as support and resistance dating back to pretty much when the market's first established. So once we came into this zone and rejected it, it was a case of retesting it and then looking for shorts from there on out. And we actually had this formation. We had this short-term support here, highlighted by this blue zone, and I actually took two shorts on this pair. So I initially took a short off this candle here. We had the break below support. We came back up. We formed a lower high with a strong bearish engulfing candle, and I put my stop losses just back below here, and I was targeting pretty much the start of this bull rally here, which would have offered me a nice 1.1 to 3 risk to reward. But instead, after this drop here, I moved my stop loss to break even, and when I was on the train to York, I was just watching this pair across the 15-minute time frame, and just kind of honing in the stop loss. Each time it would further decline in price. I'd move my stop loss past entry, but unfortunately, after forming a new lower high, I was pretty much thinking that this pair was going to collapse out the sky. I moved my stop loss just past this lower high here, but the next candle was a huge bullish engulfing one, and it took me out of the trade at a small profit. However, this bull run led back into this region here at 159,400s. We had one test of breaking above it. That didn't occur. Price came back down, formed a strong bearish engulfing candle, just closing below the 50 EMA, so I decided to enter short again. I moved my stop loss to pretty much the top of this wick here, and I targeted pretty much in line with the start of this bull rally here, which gave me a risk to reward of 1 to 2.5. We kind of sat and consolidated within a loss for some time. We had one more test of 1.594, which proved strong, and price absolutely collapsed, and it is currently 52.7 pips in profit, but I have manually exited this trade. I didn't want to hold it through the weekend, although there was a positive swap on it, so I would have made profit from just holding it, but I just wanted to be out of the trade and secure profit pretty much heading into the new week. Again, this position was posted on my Instagram. I didn't post it as an actual picture. I posted it on my Instagram story, which is where I post all of my live trades, so make sure you go ahead and follow me at Nick Lindley FX so you do not miss a trade in any of the upcoming weeks. So heading into some live market analysis now for the week ahead. I want to start with the Australian dollar to the Japanese yen. This is another pair I also broke down in volume 2, last week's episode, and I highlighted a strong bullish bias. What I did have was support marked at 77,500s, and I did say that we were going to have one more test of this before rallying higher, which in fact we unfortunately didn't actually get, but we did have this bullish, almost bullish engulfing candle, and then we had the clear break above 7800s, and it was all bullish candles from there on out. Again, you can go back on volume 2 and check this breakdown. I highlighted my clear upside targets, which have now been hit. It's a case of coming back down, reanalyzing this pair and seeing where we're going to be heading for the week ahead. Friday's candle actually closed as a strong bullish engulfing candle, but we do sit as 50 EMA as resistance. We haven't yet broken above this. I have highlighted for some time that the 80 hundreds region is my long-term target. But what is also to mention is this pair could also plummet. There's two ways where we could go on this. Now, I have marked a consolidation region on the 4-hour time frame. It doesn't look like much at the moment, but it will make sense as I go into further detail. Pretty much, if we take this swing low here, I mark this down with the Fibonacci retracement, like so. Sorry, this actually works much better on the daily time frame. We have the 61.8% and 7900 region acting as strong resistance alongside the 50 EMA. Now, it's going to take a lot of bullish momentum for us to break and close above this level. So if it does, again, it's all 8000s as the upside target. However, price could also fail to break above all three of these regions and instead tumble back down to 7800s. Who knows? We could go either way on this pair. Dropping down onto the hourly time frame now, we can just see this consolidation range a bit more clearly. Saying that this trade can plummet, it is not a trade I will be looking to take because it doesn't fit in with my trading criteria. So although this pair could absolutely plummet, it is not a bias that I will be acting on. Instead, I'll only be looking for longs. Now, for a long trade, I will be looking for price to make a descent down into this support region at 78,600. The reason being is because we're very much within a bearish trend structure still on the daily. I'll just go back quickly. We had this pull back up, lower high. We came back down, and we could be forming another lower high here at any moment. So we're still within bearish trend structure. Now for that to be broken and for my bias to shift, what I need is price to show a clear rejection of bearish trend structure. What I will need for that to occur is for price to decline and reject any further collapse in price. Now what I would like to see is for price to decline, hit 78,600s, which could also coincide with the 50 EMA. It is a region which, if retested and rejected, would confirm a shift in the trend. Reasons being I will not mention because it's best to keep some of your secrets up your sleeve. But what I would be looking for is some hourly to 15-minute candlestick rejections and consolidation, maybe a few wicks down to entice short sellers into the market before manipulators potentially push this back up. If I could obtain a long entry on this pair, it would not be something I would be trading for much higher than 7,900. The reason being because we still could collapse. So if I do take a long entry, it will be a very short-term play only. Because let's say if I did get a long entry and I was targeting my long bias of 80, I would just be a bit skeptical and holding it. I would be fearing that a drop in price could be imminent, and it will just kind of lead me into probably some bad decisions with managing the trade. So it'd just be the case of obtaining my preferred entry, obtaining a adequate risk to reward, and simply just getting out of the trade if 7900s was hit. To some people, this setup may look a bit wishy-washy, but this support region for me makes a lot of sense if it is retested and rejected. Again, it's reasons that I will not mention because some secrets are best kept secret. However, if we do see the decline in price and we do see a break below this support here, there could be two scenarios. This could be a false breakout, which therefore I'll be waiting for an instant bullish engulfing candle straight back into this region, where we could then look for one more retest of the support before heading back up to 7900s. However, if we do see a break below support and we don't see an instant bullish engulfing back into the consolidation range, then it will be the case of retesting 7800s one more time. It could go either way, but as I'll mention one more time, I will not be activating any short trades. I will only be looking for long trades for the short term on this pair. And last but not least is its counterpart, the Australian dollar to the US dollar. Again, this is a pair that I do enjoy trading because the Australian dollar is a currency that I find quite interesting, and also the US dollar is very much manipulated by the fundamentals itself. So as long as you can master reading in between the lines, you can pretty much obtain some great entries that not a lot of retail traders would know about, which swings the odds in your favour. However, I'll just quickly highlight over this daily time frame here. I have broken down this pair, I believe it was in volume 1. We do have daily support at 0.70500, which was, we thought we were going to hit it before going long. However, price just couldn't quite make it, and instead sprung back up. Again on this pair, similar to Australian dollar to the yen, we are still in a bearish trend structure. We did have higher highs here, higher low, higher high, higher low, higher high. However, this higher low here was broken, which shifts the trend, and it's a case of potentially making a lower high before price collapses. However, short plays are not something we are looking to trade. Instead, we are only about the long entries, and if price is going to collapse in the long term, I believe that 0.7200 is a key price for this pair. I think that it needs to be hit before we extend lows, so it's a case of potentially obtaining a long entry up to the targets of 0.7200. Now, something I just want to highlight on the daily is this yellow zone here around 0.7100. It's a bit more clear on the lower time frames, but as we entered this region on the daily, we had some consolidation, a wick to either side before we broke below it. We had one test of it as resistance, two tests of it resistance, 3, 4, before eventually breaking out of this zone. Now, to me, this shows that the bullish momentum is there in the market. However, because we are still within a bearish trend structure, what I will need to see is price reject further lows and instead place a higher low for us to enter long. Heading down into the 4-hour time frame, we can just see this this yellow region a bit more clearly. As you can see, we had some consolidation within that area here. We acted as resistance here. Again, we had some consolidation in this region back here before breaking out and pretty much making short-term new highs. Now, for us to consider any long trades up to 0.7200s, what I would like to see price do is pull back and form an initial higher low on this region here. Now, you'll see why I've just marked a smaller blue zone in here, which I will show on the hourly time frame. However, if I just zoom out on the 4-hour time frame, that is pretty much what I'm eyeing for that sniper long. Now, price could, on the open, extend highs and just go straight up to 0.7200s. That could happen. If it does, I will not be entering long. But if I do see that pullback and rejection of this support zone, then I will be looking across the 15-minute and hourly time frame for that long entry. Alternatively, price could just completely fall out the sky, break through support, and if it does, then my long bias will be invalidated, and it will be the case of eyeing up a fall back into 0.70500s. But again, I will not be activating any short trades if that is the case. Now, looking more into some fine detail on the hourly time frame, I've actually marked this blue region inside the support here. And what this does is we can just see some consolidation on the previous lower high on this pair. See, we got 1, 2, 3, 4, 5 wicks forming before price made its last low. And then what we saw was price rally up, kind of slid up. There wasn't much momentum. We broke through this level here. We retested it before then price put in some strong bullish candles, especially this one here at 6 o'clock on the 15th of February, and that kind of confirmed, okay, it looks like the bulls are here to stay. In that case, I will want to jump in on a long trade. Now, what I can see price doing, pulling back into this region, if I just get the Fibonacci tool out, one swing high to one swing low. The blue region perfectly aligns with the 61.8% bullish fib retracement, and the 50 EMA could also look to flatline within this zone here and could also act as support. So if we do fall back into the region, we have 3, 4 confluences to hold price above it. And then if we see some 15-minute strong bullish candlestick play, I'll obtain that sniper entry for a long back into 0.7200s. Be sure to take note of this setup here. Screenshot it if you wish, and then if it plays out to perfection, be sure to just DM me and say, look, you are the real Mystic Mac. However, you know, if you screenshot this setup and it doesn't work out, and we do instead just decline and new lows are formed, then I'm sure you're more than welcome to DM me with plenty of hate, telling me that I'm a load of shit, a load of bullshit talker, and I shouldn't be trading. Who knows? Who really cares? Not me. It's just a case of saying what I see, and hopefully you guys can take some benefit from this and make some money alongside me. Anyway guys, that's it for this week. That's volume 3. We've consistently uploaded 3 weeks in a row. I'm here to stay, and I'm going to be providing a lot more information for free. I want to get rid of a lot of these phony traders out there, on Instagram especially, who are much more social media marketers. It's time to clear up this industry and stop people from being scammed. So I just want to provide some valuable information for free, show my skill set to the world, and hopefully make a name of myself. So if you want to keep up to date with all of my live trades and live analysis, go ahead and follow my Instagram at nicklindleyfx. And if you want to see my longer term outlooks on pairs and also a few of my other live positions, go ahead and follow my trading view. Again, the same username, nicklindleyfx. I hope you guys enjoyed this video. If you have, click the like button. If you want to stay tuned with next week's video, make sure you click subscribe and click the notifications button. Thank you guys again, and see you soon. Bye.